Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. I'm Mark Gardner. I'm welcoming Jonathan Takadina and Kai Chen. Welcome, boys.
Hi,
Hey
everybody.
guys.
Episode 105. AI stocks savaged by AI, basically. There's no other way to put it. And whether it be Anthropic and the research papers that have come out this week that apparently are is going to take everyone's jobs. Or whether it is the AI stocks themselves announcing CapEx, 20 or 50 billion above analyst expectations. All week, there's been negative reactions in tech. It started previous week with Meta. They announced their CapEx, which was 20 billion above the highest analyst expectation, and they got smoked. But then they looked at the underlying business, it rallied back. But it happened all week. First, it was just CapEx was way above from all the Mag 7, and they got hit. And if their results were bad, they got hit even worse, which happened to Microsoft, Amazon, and the
Oracle.
like. So, yeah, you don't. Oracle's a dirty word at the moment. We can't mention Oracle. It was like, how did that stock go from hero to zero so fast? It was up like 100%, and then it's now just in the toilet. But that's markets, I guess.
I think it's
Look,
more than markets,
but
though.
yeah. Well, look, a lot of these reports were so Google's report was better than its previous quarter, but the market was like, nah, it's crap. So and that seems to be happening quite a lot. Like they're actually improving on a heap of metrics, and some of them have even on a percentage basis. But the market it's just had enough for whatever reason. And as you can see here, I mean, forget the down. I mean, don't forget that down bit, down 5.16. But that's the hourly at the top there. The daily's in the middle. But most concerningly, we've been doing this the technicals thing where it's about 15 odd technical indicators, and it just takes the average of them all. That's the weekly at the bottom. I've never seen a sell on the week. Not even in April back last year did we see a sell in the Nasdaq on the weekly. So that gives me the heebie-jeebies a little bit. The dailies have been in strong sells before, but never that. So to the point where I actually went and checked whether I'd buggered up the grid. So because it has kind of gone sideways.
Yeah, but if you kind of bring up the weekly chart on Nasdaq or even the daily, you can see it has broken a few support levels, and and I do say this in a bull market, all news is bullish. As you said, we've had good news from the Mag 7. Like they're still kicking goals, but the market, is not impressed, and they're using this opportunity to sell into it. So it looks like that rotation out of tech into value names continues. And the way I'm seeing it,
out of tech into anything else but tech,
and the way I'm seeing it is like it looks like it's sell the Mag 7 and buy emerging markets. So Nikkei's still at highs. Kospi made new highs this week. I haven't checked the Brazilian markets, but in relative terms, the XJ has held up well, all except for today. But that rotation keeps going.
Indeed. But overall, I mean, look, I don't know whether is Japan really emerging markets.
Well, just everything apart from the US, basically. So
well, yeah.
The way I see it, the money's fleeing the US, or not fleeing, but maybe they're just taking profits. Like they've had a great run. Plus
it's the same as us in gold and silver and precious metals. Like we took profits. It's like it wasn't, it's been a good run. Our investment thesis was it was a blow off top. Investment thesis was starting to look, like it was largely fulfilled. Like that's when you get out, start looking for other opportunities. That's markets.
Yeah, and don't forget as well. So I think what kind of triggered that selling as well is that the dollar index actually sold down as well. So everyone that has invested in the US, they actually got a signal just from FX that, hang on, your investment is actually losing money there as well. So that's another, when you look at it from an overseas investor that's piled into the US and the dollar's weakened, it's like, hang on, my investment's actually losing money here as well. just based on FX. So another catalyst that, maybe it's time to, cash in your chips, because, from what I heard, like there's been sovereign wealth funds that, they're like top 10 Nvidia holders. I think they've like 10 bagged their money, and we're talking large chunks here. So, just to trim some of that, makes total sense.
Everyone will just start watching them down now. It's only down 0.5% for the week. The dumbest index in the world. So look, we've been gold names as well. So we went into this show last Friday, kind of crowing, and then woke up Saturday morning, and I'm eating my breakfast, and I spat it across the kitchen table because I saw that silver was down 31%. Look, we sold out of Newmont last week, and then we started switching to Aussie Tech, and a little bit of platinum and things like, and just starting to diversify. But that was sort of the last of our gold trades, really. But we sold out of silver physical at 110, and we went to silver miners. So we only copped half of the I think it's nearly 40% downside move this in the week. So that's the biggest move since 1921 in silver, and it's effectively it's like a million sigma. Like it's it shouldn't happen basically, but it wasn't help.
It's impossible.
Yeah, apparently it's impossible until it happens. But the exchange upped margins pretty significantly, which is the cost of how much it to hold one contract in futures. And I think the upside got cleaned out, the downside got cleaned out. Since then, so we got to 74, we went back to 90, we went back to, and now we're down at 65. So we basically had nearly 15 years worth of range in 3 days, and effectively nearly a $60 range where we've nearly visited, most of it at least twice. So like COMEX, the COMEX market's largely is a futures market, largely paper, nothing's delivered. So it basically it's just a meme coin now. That COMEX market, it's kind of not really. I don't think it really reflects, probably what's going on in the physical market. It's got to settle down at some stage. Whether it's down here, it's whatever. Oh God, this will age poorly. But whether it's around this 70 mark or 68 mark. And that I looked 10 minutes ago, so it could be already back at 80. I think it's got to settle because, there's no way that this price action's real. No, there's no one walking with a physical bar of silver with their bullion dealer and going, I'm buying 60s and selling 90s in the Arvo. Like that, it's just that is literally. It's now become Betfair. It's just morons betting against. Like it's a zero-sum game where they're just betting against each other. Nothing will get delivered. So it just I think we're probably at least a week or two away from there being any real chance of knowing where it's going to settle. So
yeah, exactly.
Aussie Tech continued its route. Wise Tech is about as unpopular as its founder. Down 19% on the week. I think it's under $50. So if you we were sitting here last year whinging and blowing up about why BHP wouldn't go up. So this time last year, BHP was at $37. Even today, with it down 3%, at like 50. It's been to 53 this week. WiseTech was at $120. So you've basically made 40% in BHP and lost. And well, if you were short, you would have been, it's down 60 odd percent or more, maybe 70% in WiseTech. So that's quite a rotation. And fundamentals, probably a good example of how they don't particularly matter, because those two things should not be that badly mispriced.
Yeah, and I would like to add, and I've been telling my clients is that I just think because there's more algo trading now, there's more algos out there. And in general, algos, and I'm going to oversimplify this, but algos are either momentum or reversion to mean. And we just see that basically when something's got momentum, it just carries on. And so, yeah.
Let me just tell you, Kai and I traded mean reversion. Mate, there is no mean reversion algos in stocks. I'm telling you right now. The market does not go sideways at all anymore. It either goes up at a rate of knots or down at a rate of knots. Mate, you equities blazers. It's the equivalent of watching an explosion or a glacier move. They're two different things.
Exactly.
And you haven't seen mean reversion.
Yeah, but the point I was trying to make, and that's why we're seeing such massive moves in every asset class at the moment, is that like the algos have got control. When they see something moving in one direction, they just pile on in, and that's why, buying begets buying, selling begets selling, and that's why we're seeing these massive trends. So yeah, just that's
computers don't have opinions.
Exactly. The thing is, they're not there for value. They're like, okay. Momentum's heading one way. Money comes in, I buy more. Simple as that. Or money. They're asking for money back. I need to sell more. Things like that.
Yeah, I mean, we took off. We set out a thing yesterday, just risk off generally, trying to get back to 40-50% cash. Which most of our clients are. We're taking profits in Rio and BHP. We got rid of Paladin. Which I was upset selling down 6%, but it's another 11% today, so maybe I'm not so upset anymore. And thankfully, because I was a mean reversion trader for 25 years, I have learnt to dollar cost average and not buy, because we are keen on Aussie tech, but we bought one of 4 clips. So that's that is the advantage that, we do like it, but it's kind of, we're now when we're doing these things, it's like we'll buy one clip because it's value, another clip when it inevitably falls 10% more because it's value, and then the rest of it is usually either on an earnings announcement or a catalyst or the technicals turning, and that plan's worked quite well because back in the olden days, like 2023. You'd go, this is value, you pick it, and then sit around 6 months waiting for the next earnings report to come around, and with your fingers crossed. So, and that's that isn't much fun. But let's have a look at the US now. Microsoft, I mean, Meta reported really well. I'm surprised about that. This is just horrible. And these guys here, these are the software guys. That's just been murdered. That really has just been murdered. And Amazon as well was, I think, I'm not sure.
Apple's
that doesn't include...
Apple's the shining light over there.
Yeah, the ones that didn't invest in AI.
Yeah.
So
Who's laughing now?
Berkshire Hathaway, who are in cash. But Amazon's another 11% in the aftermarket, so you need to add 11 to that. So it's down 19. Oh my God. Palantir knocked it out of the park and is down 17 on the week. Palantir genuinely knocked it out of the park. They beat every analyst expectations, even the top ones. And they were up like, oh my God, I can't believe that's down so much, actually. I didn't even see that. So yeah, they're... It's pretty horrible, but as you can see, that rotation, Pepsi up 12% for the week.
Oh yeah, if you have a look at the charts of Costco's had a good bounce, and
Costco's back, baby,
and Walmart's at record highs or very close to it, and that's
is it?
Yeah, that's one of the few charts that's bottom left, top right. It's and nice and steady, like basically, yeah, go Walmart basically.
But one thing this is just a subtle difference. Is that this, for the first time, you can actually see the logos in these smaller sectors because these guys have lost so much market cap.
That's it. Yeah.
You couldn't, because these little sectors were like, because all these squares are a portion of market cap of the entire S&P 500 for those of you playing at home. So Newmont just that logo didn't even used to come up.
Mm-hmm.
So that's it. It's a bit of a random sort of thing to notice, but these guys, you never used to be able to see them because these guys were so big, they just dominate the entire market map. So So yeah, no, it's yeah. So there has been some green. Um, the transport index they were crapping on about on Bloomberg all week because it was the only thing that was up. That's this little section over here. Um, so yeah, but I mean, look, this is all on the back of Anthropic. For those of you who don't know what Anthropic is, I'm going to pass to Kai because I'm not going to explain it.
Yeah.
Because
Well,
I
it's
had to ask him
interesting.
this question, but
Yeah, well, I mean, Anthropic, they were essentially like a spin-off of OpenAI, right? Like, I mean, half the guys, the original founders and stuff were actually OpenAI guys. Very different ethic. Some people think that Sam Altman's pretty shady, does not care about I don't know how you call it, like the ethics or the limits put on AI. Whereas Anthropic, their mission statement is basically developing safe AI. But funnily enough, it's like over the last year or so, they've really come out on top because, like, I mean, their models like Claude and Opus, which is their most current model, it's really in the lead, right? So it's like basically the top two players at the moment in the LLM world is Claude and Gemini. So Gemini is also very very good. Um, but yeah, basically, I think the development this week is, they created this AI legal bot. They've been doing really well. Like the products that they come out with has been pretty spectacular. Like if you're from a programming background, they release a terminal command line version, and it's amazing, right? Like it's
so the
crazy.
CEO,
Yeah,
the head of Anthropic came out in an interview this week and said there will be no software engineers in 6 to 12 months. Like that's, and he wasn't like being mean, but and he even gave the example of, he goes, I speak to my engineers and they just go, they haven't written a line of code in over 6 months or 12 months. Like,
well, I think we experience it fairly firsthand, right? Like, I mean,
well, you do. I mean, let's face JT. I mean, I don't know how much coding you do at home, but I'm a big fat donut. So
Yeah, I'm the same.
But yeah, like as a comparison, how long do we spend doing a website manually on WordPress, and it's it might be like a month or two. Doing a website nowadays is literally one day, right?
which
If you
you
had all the
did
assets.
today,
Yeah.
which is as a business owner is both exciting and infuriating.
Very scary.
But yeah. So, but I mean, Anthropic obviously, they're, and look, I mean, it depends on which benchmarks you look at and blah blah blah. But I mean, but Grok's obviously benchmarking off the hook as well. But we use quite a. I mean, I don't really use Anthropic or Claude generally, but the but for what I use it for day to day, GPT, I there's one thing in there that helps us do these images, but to be honest, this one's made by Grok. The little videos that we do for the social media are made by Grok. Like if you're writing articles, Grok's fantastic. But then you'll flick back to Perplexity, and you can use use a bunch of different models there, you can actually use the different LLMs within Perplexity. So
Yeah.
they're all pretty horses for like at the moment they're all pretty horses for courses. But I mean, it's not like it was really weird. It's not like this was new news.
Yeah.
And a research paper like this was met with up 10% last year. Everyone would be joking, yeah, everyone's going to spend more on AI. And this week it was met with, oh God, we're all going to die. So hence
I
the
do on the converse side of it. I do think it's not going to be as crazy as the CEOs state, right? I mean, they do have a bit of a bias to spruik up their models.
yeah,
But I think we talked about this last time, and it's kind of like I think the bottleneck is actually private data, right? Because if you really look at the frontier models and what they're coming up against, it's like they managed to get basically scrape the whole web. They managed to create synthetic data, but if you think about like how much data is actually private, it's a massive bottleneck, right? Like if you go, okay, we can create a medical bot, but really like the medical records are sealed, so well per patient, right? So It's very similar across many different industries. These general LLMs are getting incredibly smart. Like as we all see. But I think it's like, what you don't imagine the smartest person in the world. What you don't know is what you don't know, right? So if you don't have access to it, you can't learn. So um, I still think there's a bit way. Yeah.
which is where Google has a pretty big advantage.
Mm.
I
It's data.
mean, because
Data is
they were working on what they sort of named the Library of Alexandria project, which is I mean, they've scanned every book ever published into and the Library of Alexandria was one that I think Alexander the Great burnt down in the end, but it had like someone centralized, or he built it, and someone centralized, and every bit of knowledge that when he dominated the world, he put it in one place, and ended up burning down and being lost. But like that, and that was what Google, their thesis was. Well, we're going to digitally collect as much information, and they've been doing that since the early 2000s. Well, sorry, mid 2000s, wouldn't be early 2000s, but and there's gonna be a lot of data, and I think I think you're right. Things like
and don't forget all the all the users on Google as well. All the
oh
searches.
well, yeah. I mean, Meta's got that as well, but but data's going to be valuable because like things even like Pro Medicus. I mean, the amount of X-rays or whatever radiology images and things like that. Those, that data, I think, is going to end up being probably worth more,
Yes.
or at least a very large chunk of their. And I don't think anyone is really valuing it as an asset yet across the board. And maybe it's too early, but I mean, who knows? But yeah. So that I literally, my prompt on that was show Anthropic putting lawyers and software engineers out of business, and then I gave it a style, and then there you go. So, sort of how easy it is, and overall, for those of you who watch our morning and morning podcasts and things like that, it's where we get those little images. But yeah, so that's kind of what's been driving this part of the market down here, which everyone thinks that Salesforce and ServiceNow and all these guys are basically going to be, they're Anthropic's going to take over all of their tools as well, and they're largely going to be toast. But I think it's probably a bit more just an overreaction generally.
What's
this is just the Nasdaq on this one. Yeah, it's just the Nasdaq, and it's just a daily back to, I don't know, it's not back that far, 2023. It was just more that when in the past we picked this move previously, and this is when I was copping a lot of crap from our clients and everyone online. Just before it collapsed, but the average move, it was almost bang on. That was about 25-ish% or 24% in the Nasdaq. So from the record high, bear market territory is still a fair way away. I think it's still sort of at least 15% away, or about nearly 4,000 points. But we have broken through the 100-day moving average, which is that line. We've broken through the 100-day moving average, and then this is the 200-day moving average here, which is not that far away. We're talking, that could do that in a night quite easily. It's like 700 or 800 points, but so we're not even close to bear market territory. Like we're still near record highs, so. I sort of think that this can definitely gain some momentum. The average since 2015, the average low is 25%. So that's where we'd be looking. If it did hit bear market territory, we'll be going to about 19,000-ish, 19,000 and a half.
It's pretty bad this time though, because remember, the last time it was caused by Trump's tariffs, right? But this is like tech led, so it feels it doesn't feel too good.
And that's another really important thing about this is if these guys fall, like look how much they are of the market cap. It just it gets sucked out. Like the rest of the rest of this market can't save this part, this enormous tech part of the market. So like I haven't heard a thing about Nvidia all week, and it's down 10%. Like, and I think they're going to Apple and Berkshire Hathaway. They're both sitting on massive piles of cash. So I kind of get that, but there's only.
And the point I want to highlight is, so we had strong GDP numbers in the US, but that was all AI. Like it's just all AI investment. The rest of the economy is actually flat to negative.
Yeah.
The only bright spot was AI, and the bright spot's turning now. So that's what's concerning me, is that like the one sort of bright spot where everyone was hanging their hat on, hey, this is what can save us, and the thing is, they've done their job. The Mag 7 have actually delivered, but the market has now taken the narrative as, hang on, let's sell into this strength. So that's what's concerning me. Is that,
and it's the same data and information that we've had for 6 months, but the narrative is 1,000% just flipped completely. So yeah, I mean, I guess I'm not surprised in terms of like the news isn't remotely surprising. I'm surprised that people are surprised about it. But anyway, it just is the way that markets are. Like Anthropic was going to do this, like this, it was going to happen. It was always going to happen. Everyone said, it's going to affect jobs, and everyone's like, that's a tomorrow problem. Fucking, how many data centers are we building? And now now here we are. So, commodities. So let's 43% for silver for the week.
wow.
Youch. And look, and for the record, silver miners, 20 only, I think. So whilst it was a good switch, youch. And gold only down 5 for the day, but 14 for the week. So when these bars get beyond 20%, they don't put a label on them. I don't know what's going on. Platinum's down nearly 30. Bitcoin's down nearly 25. And Bitcoin looking a little bit like a horror show. And we do have Finn was feeling a bit crook today. He didn't really, Finn's our crypto expert. He's been in it for about as long as you possibly can. He's like the equivalent of Gandalf for crypto. He's been, despite the fact he's 26. But JT interviewed him, and I'm going to put that at the end of the podcast because that's just a whole other can of worms that we probably just don't need to go down that rabbit hole. And it's like a little 10, 12-minute interview, it's very funny. I kind of knew that. I said, just give us 2 minutes, you guys, and it was 12 because you can't explain it in 2. It's impossible. So yeah, we'll shorten up our version. That was so these are ones from. So we still have the Jam Pack January. All this stuff's still going on in the background as well. Not one of these has been ticked off the list. But now the fire has spread to gold and silver, not just the US dollar. So I probably should have checked my slides there. A little bit of technical difficulties.
I think it's let's get to what do you call it? Fear and greed, and what's our prediction?
Fear and greed.
Oh, hang on, sorry. Yeah.
I know earnings is largely over.
Well, Aussie earnings
we don't really have.
Today. So,
I bet Aussie earnings started to, yes, yeah, correct.
So RIA came out today, and not pretty. But
more on listings. But I don't. They could have reported well today, and it could have been a disaster. To be honest, like it's not. It's a sell everything market, right? So and tech was already down, but like I stand by. I reckon this is still pretty cheap. So, but you just got to. But it could get a lot cheaper, so you just got to be smart and dollar cost average. And maybe we, we're not doing quarter clips. Maybe we're just doing little bits and pieces. But Mosaic, Kai. Speaking of things written by AI and or assisted by yourself, that's your first hand. In terms of getting that up and running, and it's been fantastic in terms of being able to get things up for the clients as well. But we amazing amount of active people on it now, and we're getting loads of feedback and things are being changed. It's been great, and we're getting so sign up for your free trial, because we're pushing out. I mean, we're pushing out quite a bit of content, keeping people up to date. But I mean, just literally the push notifications for our recommendations to switch out of silver, to sell Newmont. To basically yesterday, before lunch yesterday, to be trimming your portfolios, getting those in real time via the app. It could have saved you a lot of money in the last couple of weeks, and it literally is. It's $149 a month, and which is it is literally less than a coffee a day. So sign up for your free trial, and then you can have all the we have all the recommendation services. You don't have to pay for the first month, and you can cancel any time in that period. And then it's $149 a month after that. So we've got 3 bears here, and one idiot being me, losing on the scorecard. Kai's 4 from 4, which is. But yeah, so 3 bears at the moment. But yes, and we're back into fear territory. I just thought, it's what happens when you listen to JT, bloody hell. So, never moves over earnings. It's like the one time that I listen to him, we actually get a move over earnings. So yeah, and a shout out to Jim.
Sorry, that actually should tell you something though, guards. Like, this is the one time where
but maybe
we're good, but they've decided to this is the one time, let's sell into it. So this time could be different, basically.
It could be. So shout out to Jim Cramer. He gets a lot of crap online, but he's been right about 3 things this week. In the last 2 weeks. Selling silver was one of them. We normally, but it's impossible to give out a Kramer of the week anymore, because you could have been awarded the Kramer of the week and then been right within 12 hours about 6 times, both in equities, in silver, in gold, and everything. It's very much a hero to zero style scenario. So I'm not going to catch up to you blokes at all next week. If we're all wrong, we're all wrong. Maybe we can guess where the what number the fear and greed index will be, just to split it.
You want to add a first try scorer in there, basically?
No, well, look, I'm behind. I'm really just clambering for ways to get back points.
Well, it's like the footy tipping comp. Like, you got to find out what the leader's tipping, and if you got to catch up, you got to tip against them. Whereas Kai's going to try and just protect the lead now. Just stick with the favourites.
Oh no, it's 100-week challenge.
Yeah.
No, it's not. Because if I get too far behind, I'm going to have to wipe it. It's one of my privileges as CEO. But I reckon, I think we could probably head into the extreme fear territory next week. We were going to have payrolls out tonight, but that's been cancelled because of the whole one-day government shutdown, which ironically it wasn't even at the BLS, I don't think. So it was only a partial shutdown. So they haven't said when they're going to release it, but I'd imagine it's not a good number. So JT, why are you bearish next week?
So I was bearish 2 weeks ago, and I'll maintain this, is that what I saw in gold, silver, and bonds, which are 3 fairly, normally stable stores of value, I just saw massive volatility in those instruments. And I'm just like, man, look, this is not right. Like, don't get me wrong, I could be way off, but I just feel like there's some dead bodies under the surface, and they need to bubble up. So that's why I was bearish 2 weeks ago. It didn't happen 2 weeks ago. It did happen last week and the previous week. But I always look at the bond market and just the rising yields. RBA raised this week, and everyone's long. Everyone is long. Like you go into like forums, the equity mates guys, everyone is long Nasdaq, everyone is long Nvidia, everyone is long XJO, and we haven't had a flush out in a while. Well, since the April low. So yeah, that's why I'm bearish. Yeah.
That's a really key point. We haven't had even the smell of a down. That down 5% for the Nasdaq. That's probably the worst week since April last year.
Yeah, absolutely.
I'm guessing here, so don't quote me on that. But and we just as this time the ASX 200 finished down just over 2% on the day. So it's because we're recording this around about the 4 o'clock mark. So it looks to be potentially a pretty ugly. It might be a pretty ugly night again tonight, potentially. I'm going to go with.
I'm going to go with. I think this. I reckon early next week. They're gonna try to buy the market up slightly. Because I think there's a lot of fear and a lot of pain that's gone through this week. They'll try to buy it up and then just get hit midweek and will be lower running into Friday next week, I reckon.
Yeah, I think that those technical breaks in the Nasdaq, and just watching the price action at the earnings reports in the mornings, the initial reaction, even the ones that went up, everything was down 5% straight away, and then it rallied back, but then obviously came off again. But I agree with JT. There's just some really stupid and. You got to think about it. A lot of those Robinhood accounts and retail investors or whatever, a lot of them are using the leverage from their Nvidia, Google, Microsoft positions from ages ago, to fund the rest of their positions on, I think, we saw that flash crash in 2022 where Bitcoin got routed because basically people were using their Bitcoin as collateral. And if their collateral actually got so low because it was so volatile that they all got stopped out in their stocks, and then we had like a 5% drop in the Nasdaq, and then it bounced back. But all of those really key holdings that everyone's had for ages, and you can include Bitcoin, like VIX is starting to go up, and then leverage is getting wound back, and then no one's going to have free cash to buy, and they're going to be and I dare say there's going to be that dreaded, the dreaded margin call, phone call come up on a few people's. Definitely happened to the poor old bloke at Goldman Sachs who eventually was actually right being short in the. But was sacked. It was stopped out, walked out, sacked at the high, and now literally he probably hasn't even sobered up from his farewell drinks, and the market's already back at where it was.
Yeah, well, unfortunately, I will say on that is you can be early, but it's still not right.
Yes, no, that's a valuable lesson. So for those of you, if you're into crypto, have a listen to crypto because Finn's been really, he's actually been. People have wanted to buy it, and
He's
for a
been
crypto
very
guy,
sensible. He's been very sensible about that.
He's been telling people not to buy it for the entire time he's worked here. So, or at least being sensible and dollar cost averaging, and so yeah, he'll it's pretty interesting. Just a little one if you want to have a bit of a look at it, and yeah, we'll see everyone next week, I guess. Yeah. Who knows where it'll be?
Guys. Well, thanks for listening.
Cheers. Bye.
Hi there, everybody. It's Jonathan Takadena and Finn from MPC Markets, and we're just going to have a quick Bitcoin update. So basically, earlier today, I saw a daily close at, I think it was 62. Then I think it was very close to getting near 60, near 60,000.
I think it even touched 60 for a brief moment there, depending on what exchange you're on.
Exactly. So basically, Bitcoin. We've seen the halving from the all-time high at 125. We've gone under or close to 60, so Bitcoin has halved. And I just want to just highlight on that shared window. I was actually on Ausbiz on the 5th of November, And I talked about the 4-year cycle, and I want to credit the source of that call, and that was Finn himself.
Thank you very much.
Yeah, so he actually, I said, Finn, can you send me that chart? And I actually put it on Ausbiz. So that's the proof. You can actually go on Ausbiz and, if you want to see proof it actually happened. But the main difference though is that on Ausbiz, I took all the credit. I never actually gave any credit to Finn. But here I am saying that this is the man who actually called it. So what was the thesis behind the halving?
Well, look, you're kind of mixing up two definitions of the halving there.
Yeah.
So maybe we should elaborate. So the halving is kind of a process in Bitcoin. Every 4 years, the amount of blocks or the reward for mining blocks on Bitcoin, it halves. It's part of the core incentivization kind of mechanism. But this kind of cyclistic cycle that happens in Bitcoin also has an effect on the price action. And what we've seen here now is the second definition of the halving, which the price is now halved. And we can laugh, but when I was in crypto, when I first got into crypto in 2017, and I had my first halving, I was not laughing. Yeah. So I've been in crypto since 2017, and I've seen this type of cycle run through twice now. The first time, what's the saying, JT? First times, what is it? I'm having a mind blank.
What do you mean by first? I mean, is this your first rodeo? Or
Fool me once, shame on me. Fool me 2 times, shame on you. Or other way around, actually.
Yeah. But we get the gist of it, yeah.
It took me 2 times to get my head around it. And the second time I was able to actually take some profits. This time, I was able to warn everyone and be a bit more upfront about it. But yeah, essentially every 4 years we see about a 75% pullback in Bitcoin.
And we worked out the number. So let's just say it's an 80% drop, which is the rough average. We're going to see Bitcoin back to 25,000 from here.
Yeah.
Okay.
Yeah.
So
I mean, seems pretty grim. Seems pretty grim. And look, it might not go to 25. It could go to 15. It could go to 40. I've got my price target set at around 45 as my kind of dollar cost average. And look, if you're entering at these prices, it's not the worst place to be in the market. I mean, buying in these times of extreme fear is always so much better than buying in these times of extreme hype and positivity. Because historically, buying during those times has not been well. This isn't the NASDAQ. This is crypto. It's a very volatile asset class, and it can be very fruitful if you play it right.
Yeah, and I will just say, I'll stop sharing that screen and actually share a different screen. One sec. I am about to share the Bitcoin chart, and I will actually have a chat on where I think it's going from here. So here we go. Share. There's the Bitcoin chart. So this is the weekly chart on Bitcoin. So here we are, obviously that most current candle looks horrible.
Yep.
But basically we are at the 2024 levels. So just remind, 2024 is Trump campaigning. There were a lot of crypto bros, sort of eagerly awaiting, Trump's election. Once he did get elected in October, he went pro-crypto and we had that shoot up. So what's happened since then is obviously the narrative's changed. The halving cycle narrative has taken over after hitting a high at 125. And we're back at these levels now at 2024. So what that means is that anyone who came in at 2024 is back at break even now. Now, as a trader, what I tend to look for is what's going to shake out those people. And what I am looking for from here is anyone that's been long from 24 or even let's say 23. I'm looking for a move below the 24 low, so around 50,000. If I see a sort of a shakeout, some sort of consolidation, and then a shoot up, that's a bottom that I'm happy to trade. So, which kind of coincides with Finn's 45k level. The actual low of 24 was just over 50,000. So that's kind of where I'm looking at the moment for, because I've been asked a few questions. You've been bearish Bitcoin, but what's the level that I can buy in at? So that's kind of what I'm looking for short term.
Yeah, look, I think 3 letters DCA, dollar cost averaging, is a fairly foolproof way to take advantage of Bitcoin's volatility over the long run. And if you're a day trader, it's a different story. But I will add, JT, that Bitcoin has a tendency to evoke mass pain. And what I mean by what I mean by that is we're not there yet. Because and max pain to me is signs of recovery, signs of volume, and then it just getting whacked down again. And if I'm not sure if you can zoom out a bit, JT, just to get a bit of perspective of past cycles. But if we zoom in, could you zoom into the 2020 kind of, this particular era was very painful. So even looking at, if you can see that first cycle.
So there's 2020.
Yes. Yeah, in 2019, where the market looked like it had kind of leveled out here, it went quite flat, and then it just kind of troughs. And it has a tendency to look like, it might break out, it's getting a bit of volume, things are picking up, and then it just whacks you down again. So, I almost trade this asset. I look at technicals, I look at all sorts of things, but sentiment is a massive part of how I trade this asset. And the more pain, the more bullish I tend to get. And it's a bit evil, but, markets are evil.
It's not an evil thing. It's just basically that's how markets work.
Absolutely.
You have to be a contrarian. So what you want to be is, there's all that diagram. Like, you don't want to be first out of the gate, but you want to follow the leaders.
Yep.
Once the leaders turn, you need to turn around with them as well. And what we've seen is there's still a lot of people calling for a bottom. This time's different on Bitcoin. Fed has to inject liquidity. And as you said, I'm with you. We have not seen enough pain for them to get flushed out. And it's when Bitcoin is an unloved asset, when no one is thinking about it, that's actually the time to buy. And I just don't think we're there yet.
Yeah, absolutely. I'm even looking at some, and I'm going to make another call here, and hopefully in 6 months' time we can look back at this and be like, wow, look what a genius Finn is. But I'm looking, and this is very kind of left curve against the grain, but I'm looking at a particular asset called Hyperliquid.
I'll bring that up.
Yeah, bring it up, because it's showing some pretty interesting price action in a time where there's, not a lot of positivity in the market.
We'll go to the Bybit contract.
Yeah, that's probably a good one.
Oh, that's a weekly. Let me get the daily. Oh, wow. So it's actually holding up here.
It is. So it recently had about an 80% move. It's pulled back a little bit. But amid the current market turmoil, that's a pretty positive sign.
Very, very positive.
And so my strategy around this, I think it could still get dragged down. And Bitcoin was down 12% today. Hyperliquid was down about 5-6%. But what I'm looking at is, as Bitcoin starts to kind of head down, I'm seeing a buying opportunity in this particular asset. And I wouldn't be surprised if it gets smacked back down to 20. It does happen. But this kind of price action is what I'm looking for a really good entry to something that could potentially be quite fruitful. And to give a bit of perspective on what this is, it's a futures trading platform. One of the largest in crypto. The largest decentralized futures trading platform. They generate real revenues, and they actually use that revenues. Half of that revenue is used to buy back and burn the token. And what's interesting about these particular crypto companies is there's no CapEx. There's no operational costs, or very little, very, very little. Maybe there's a couple devs, but very, very little operational costs. So most of those profits are actually being used to buy back the token and then burn it, which means it's not being used. It's out of circulation. So I really like this one. I'm going to be keeping a close eye on this.
Wow, it sounds like you actually found a real crypto business.
Well,
not
yeah.
just a fart coin, basically.
Well, I think so. So in the good thing that came out of this Trump situation, obviously we haven't had really positive price action. There was a little bit of optimism, but is the regulation. So regulation has loosened up a bit. The old SEC chair Gary Gensler was very harsh on crypto regulation and very unclear, which caused crypto tokens not to have a lot of value because they were very scared of becoming a security. Whereas this one in particular was created after the Gary Gensler era. And so there's a lot more leniency towards tokens having more likeliness akin to a security. So this is being treated like a security. It's actually it has a bit of value behind it, quite a bit of value. I mean, if you do the numbers, it's trading at about a 10 price to earnings ratio, maybe 11.
Price to earnings in crypto. Wow, that's
it's crazy, isn't it?
Haven't we come a long way?
Yeah, I think we've come a long way. So I think, we just need to flush in the market, get some of this leverage out, do what we need to do, get that 75%, 80%, 60% downside from the top, whatever it is, get it out of the way, and we can usher on the new, the new bull run. That's what I'm excited for.
Okay, great. Well, that does it for our Bitcoin and crypto update, and thanks for listening.
Thanks a lot, JT. See you guys. Bye.
Bye.